Okay, let's have a look at the Euro US for the 10th of November. First entry order sitting off that low. You can see the market bottomed out. Our only expectation really was it had broken that channel 5.1, so we're looking at about 10.2, and it breaks that and runs. Now it's a drift more than the run, but we're happy for any channel break. That's what we're looking for in this model. Put your channel there, project a double channel, and we're expecting a bounce somewhere in that zone. Now that's not our take profit. That's the high the market had come from. So C-click that. There's your take profit. It's doubled that previous channel, and there's 19.5, so 18 pips in the Frankfurt move. Now you could be forgiven for taking profit early. There's nothing powerful in this, but if you do so, you're just reducing your reward and maintaining the same level of risk. So risk to reward is compromised, and you're taking a lower probability take profit point. I'm saying this more for my benefit than yours. I took profit there on the short that I took up here and proceeded to kick myself afterwards for not following my own rule. Okay, let's have a look at this trigger. You've seen why this was the take profit, and you've seen a double channel predicting a bounce here, but you can also look at the last few micro channels. C-click here, C-click here. That would project a bounce in the same zone. This last micro channel here also predicts a bounce there. So in my opinion, an entry order should be sitting on top of that high, gets triggered here. Now it's up to you how you trade this. That's a high probability bounce point. We've had 3 confirming channels saying it should bounce there. We have no idea it's going to run this far. Our only expectation is it should bounce, and I'd imagine a minimum of 6 pips at that. Alright, so market runs. As I said, I lost confidence in this move and took profit too early. That is low probability and a foolish move. Okay, let's put the channel there. We're expecting at least 2 channels, so somewhere down in that vicinity, as you can see. Because it came down and broke this last channel, we're expecting it to go down somewhere into this zone. As you can see, it does it, and we shouldn't be looking for a long before that, pending any change in market conditions before it reaches that point. Okay, so if you're being extremely conservative, which we tend to be in our take profits, then that's the last channel was broken. Take profit there. You can see that I cost myself 5 pips, and the overall was 20.8, so 19 pips. That brings you to 37 pips for the first 2 hours of the session. Your next trade is an entry order off the top of this micro channel. Now, before we do that, you can see here there's a failure point through there. The market previously bounced there. It bounced there again. It broke through that value, came down to here. Our expectation would be a pullback to there. If we look at the micro channel, you can see the market bounced there, reached up to here before a pullback, and failed, went down, broke it, and then went back up again. So there is the expected bounce. The expected bounce really is to 50% or to 100% of the channel. That's all you can expect. If it runs, then you have a trade in place for a channel break. So there's your entry order. The previous channel, as analyzed before, is down to here. Then you confirm with the last channel being through that range. So there's your take profit. And you can see the market has bounced at that point, broken through it. There's a few more pips on offer, but once again, higher probability conservative bounce point, and that brings you 17.5, so 16 pips, which brings you to 53 pips. The market bounced here. That's the projected value as we previously analysed. The market bounced there, reached back, activates an entry order here. This is where you end up doing a scalp. The reason you do a shorter scalp is that a push like this and a double tap on the bottom, I would not expect that to be the low of the day. So this is a retracement. We should see an extension further south later, and it does go later, but from our point of view, this is a short-term scalp. Our take profit is the last channel. So C-click, that's where we're looking at our take profit. The market bounced through here, so you can see at some point through those lows and those close values to that high. So tighten up to the more conservative value and take profit there, which has a 13.5, so 12 pips for that particular move, which brings you to 65 pips for the session. And I don't trade any further than those 3 hours, so that's as far as I'm going to go for my analysis. You can see here the market moved prior to the opening of New York, only a brief period before the opening of New York. Your expectation in this leg here is very strong, so that is a retracement. It should find a lower low, and that lower low, there's the last channel. We'd expect it to bounce around here. It's incredibly accurate, as you can see. You just need to be patient and rely on its accuracy. It's a high probability bounce point. The reason it's a high probability bounce point is because if you go further, you may not get to take profit on your trade, and we aren't the only ones that know those values. So if we look through here and surround this last channel, you can see here the market has run to that value. Now there is a very strong 50% through here. You can see the last significant bounce point was there. My recommendation, if you were looking at a trade later in the session, there, I'll just hide the channel, there is a great entry order. Build up of tension, release of tension. Your expectation is only really 50%, somewhere in that zone. But if it does break, then you've got a trade sitting perfectly positioned to take profit. When you do take profit on a move like that, you're looking at your last channel. So your expectation is a bounce somewhere here. There's your take profit. If you want to be more aggressive and more conservative, you take it from there through to here. Okay. I hope this breakdown of the channels has been helpful for you. I'll come back and do the 11th tomorrow. Good luck with your trading. Bye.